Welcome to JC Stocks and Markets podcast for November 3rd, 2023. I'm JC. I've been investing in the stock market for 40 plus years. My intentions with these podcasts are to share my thoughts and opinions on some stock and ETF picks with an emphasis on dividend paying securities. I just want to share investment ideas so that you and I can maybe make buck. I'm not doing this for money from anyone. The opinions shared here are my own, and they are just that, opinions. I invest in many of the stocks and ETFs that are featured in these podcasts. Not the one today, but I'm looking at it. Disclaimer, do your own due diligence before investing in anything, specifically with the stock we're looking at today. With that, let's go make some money. The stock we're going to look at today is kind of a speculative one, only because it's a regional bank, Comerica Incorporated. CMA is the ticker symbol. Comerica, they basically provide all sorts of financial products. They're a bank. They provide commercial lending. They provide personal lending, lines of credit, deposits, cash management. Basically, they provide all sorts of brokerage access. They have personal wealth management. Lots of different services throughout the banking industry they have. The one thing that I did see, and you'll see in this graphic here that I got from Yahoo, essentially it operates in Texas, California, Michigan, Arizona, Florida, Canada, and Mexico. I didn't know they were in Mexico. And they basically started a long time ago, 1849. Anyway, Comerica Bank, something to look at. Branded Comerica is a regional bank, and regional banks are kind of iffy with respect to coverage of their deposits, only because of the interest rates going up. Comerica was lumped in with some of the other regional banks. I read the conference call of their earnings that were released just recently, and their CFO and their CEO appear very confident in terms of their financial position. They're trying to create some growth for revenue, deposits, that is, as well, and loans. They're making a lot of loans, as much as they can, but it's a tough market out there. This is kind of a speculative one. I only want you to put money that you feel you could lose some money with. Just got to be careful. Do your due diligence on this one. The key facts that I get off the basic information that I get from Yahoo.com: PE ratio 4.78, and that's legit. They're meeting that. They're just there's some people that are really afraid of what's going to happen if there's a downturn or if interest rates continue to go up. Comerica could be in trouble. Earnings per share is solid, keeps growing. Forward dividend and yield, this is the thing that enticed me. The quarterly dividends are pretty high, 7.2% at this point, and this stock has gone up quite a bit in the past week with the stock market. The one thing you want to know, that this Comerica was near $100 at one point, not very long ago. So if you believe that the banks aren't going to have a problem, that interest rates are going to stay stable or go lower, the economy is going to do well, Comerica could be something for you. But boy, by all means, do your own due diligence on this one. The thing that made me look at this is some technicals. The Comerica rise this week has broken the downtrend for the past few months here, but be careful. If you feel that regional banks could be an issue, and there's going to be some instability on some of these banks, kind of like what happened in March. Please be careful. Don't put your money, don't just throw it at it for the dividend. But if you think things are going to get better, if you think the economy is going to do good, this might be a good dividend play for you. Like I said, collecting over 7% dividend while the banking industry kind of semi-recovers here. Anyway, this is my thoughts here. I think that possibly that Comerica, if it stays healthy and grows, there's no reason that it can't be up $80 to $100 a share. But again, it's very speculative at this point. Be careful. Last slide I want to show you is from Tip Ranks. Essentially, they rate it as a moderate buy. There's 11 buy predictions there. 5 hold, 2 sell in the market. You can see that their average 1-year projection is about $49.50 a share, and it ranges from $43 to about $40 or $70 in Tip Ranks. Right now, it's about $43 a share, so it's already hit the low. But obviously stocks can go up and down. Lastly, about the dividend. The dividend has been paid quarterly and increased quite substantially, about 6% a year from the year 2000 to to now. So they've been growing their dividend since 2000. With that, I'd like to say thank you for listening to JC Stocks and Markets podcast. I enjoy doing this. To me, it gets me into digging into more ideas. I don't own this one. I may own it soon. But I really enjoy doing this. I hope you enjoy listening to it. Hope it gives you some ideas. With that, the outro and intro song is by a band I used to play in called Just One Goat. The song is called She's the One. It has a lot of meaning to me. And happy investing, everyone. Do your diligence, especially with this. Thank you for listening to JC Stocks and Market podcast. We'll see you next time.
It's simple, can't you see? She's the one. Oh, she's the one. Everything is magical, even when she's not around. No, it's not that radical, I just know what I have found. Well, she's always there for me. It's simple, can't you see? She's the one. Oh, she's the one. She's making my life so much stronger. God, let me stay just a little bit longer. She's the one.